G'day sports fans, John again. I'm just doing a really quick update about the market. You probably saw the market go up last night. It went up 92 points. That's right, 92 points. Now, if you're anyone like me, an astute investor, basically, I was watching Bloomberg in the morning, and it wasn't good. There was lots of really bad reports coming out, slow manufacturing, all the rest of it. We're nearly on the brink of a recession, even though we already are, but there was a lot of bad news coming out. Then I think, half an hour before the market opened, mysteriously, a good piece of news came out, and it was no really good news. It was extremely exciting news, where Microsoft had put a bid in and are trying to buy out Yahoo, the search engine company. What do you think the market did? Went up, that's right. That also tied in with what's happening at the moment after the Fed had cut rates. Now, Mr. Bernanke really doesn't know what he's doing. I mean, you're talking about a panicked rate cut, then another rate cut a week later. So what we've had 1.25% rate cut in about the last, two and a half weeks? That is ridiculous. I mean, that hasn't happened for, 50, 60 years? And it's going to lead to the ultimate crash, is what I'm saying. It's just all the links, like I said, all the links in the chain are slowly breaking, and that's another one. But yeah, anyway, what I really wanted to talk about was two things. And the first one is just about the market, or what's been happening in the market over the last couple of weeks since my last update. And the second thing is probably what's going to bring the market down, probably maybe 500 to 1,000 points. And that's the bond insurers that are trying to bail out all the banks and the subprime loans that have gone, belly up. So I guess the first thing is, this Fed rate cut, normally in any market conditions, when the Fed cuts rates, it's normal for the market to increase. So you'll normally find a small or a large buyback rally. Because we had such a large sell-off and it was so extreme, we've had one of the worst Januaries on record ever on market. So this buyback rally is there's a lot of manipulation going on by the big guns, but you're seeing exactly what I thought would happen anyway. And it's probably going to continue for a little while longer, but like I said before, it can't sustain itself. And it will ultimately come to an end, and the market will turn back down, because officially we now are in a bear market. And I guess basically on my screen, what I saw today was a whole pile of orders going through, and they were trying to shake out all the bear investors, or the people going short on the market. Now, what they're trying to do is shake out the short sellers, so they can send the market higher, and also put a little bit of stability back in the market. And like I said, it's probably going to last for a little while, but I don't think ultimately it can last too much longer. And the next thing I wanted to go through, which I think is extremely, extremely important, and that's basically the bond insurers on Wall Street. And this is going to be the next big thing. And I think when you saw the big sell-off back in January, or the start of January, it's going to be nothing compared to what happens with what I'm about to say. There is a few companies, and I'm talking about MBIA and AMBAC and a select few others, which are major bond insurers in the financial sectors, and they are actually trying to bail out some of the banks in the subprime mortgage and credit crisis, and they are going broke. They're going broke. They're basically trying to save all these big banks, and they're insuring all these banks in case something goes wrong, but they themselves are funded by who? The printing press and the banks. So they're going belly up as well. It's serious stuff. But the thing here is these companies at the moment have a AAA rating. That rating is solid and stable and gives investors confidence that they can go to them in case of an emergency. Well, the emergency is upon them. And there's an investor service, Moody's, that is on the brink of saying these bond insurers are in real trouble. They're going broke. We have to downgrade them. And if they do that, that's going to be absolutely catastrophic. Why? Because why would you want to invest in a company going belly up? And why would you want to do business with someone that's not AAA? You can get in trouble yourself. So you've got these big bond insurers, being AMBAC being one of them, and MBIA, which are two of the major bond insurers over in America. Together in 2007, last year, combined, they lost $5 billion. It's incredible. And at the moment, they've got a big crisis on their hand. Why? Because related to subprime and credit and all the rest of it, they're in deep water. They have to try and insure $1.22 trillion of debt. And I mean, that's probably not even touching the surface. It's a very serious problem. It's a very serious problem. So I guess what I'm really saying is this is the next big thing, people. There's a lot of things. There'll be a lot of negative economy news. There'll be a lot more subprime related stuff, even though that's sort of coming to an end. There's going to be more write-downs. But this, people, is going to be the next big thing. And I believe if MBIA and AMBAC, because they're in a lot of trouble, you'll see a lot of people are trying to bail them out. There's going to be investors that are allegedly trying to take over the companies before they go belly up. It's not going to work. The government's going to step in. And if they don't intervene and do something serious, this is going to be major. This is going to be catastrophic. Is what I'm saying, and it's going to be the next big thing. The market will crumble to its knees. You'll probably see the Dow go from 12,700 where it is now, right down to 11,000 or possibly even 10,000. It's that serious. So the rally that you're seeing at the moment, yes, probably short-lived. We're definitely in a bear market. There's a lot of shaking out. There's probably a lot of people short selling that are getting shaken out at the moment. But this is the next piece of news: the bond insurance companies. So look for the next maybe a week to 2 weeks. I really think that it can be that serious. And they're sort of saying, or the Moody's Investor Service, who are meant to be downgrading AMBAC and MBIA to down from their AAA ratings, is going to happen in the next couple of weeks, and it's going to be very serious, like I said. So just an update, just to let you know, the things are still serious out there. The market is being heavily manipulated. There's a lot of people that have turned their backs and still think the market has hit the bottom when it hasn't. So yeah. Anyway, thanks for listening to this short little update. Keep you posted, and thanks for listening. Enjoy your day. Bye.